Hey, this is Sasha Evdokov, founder of TradersFly and InvestingHelpDesk.com, here to answer a few of your frequently asked questions in detail. Now, this week's question, what I have is, when a stock is trading in a channel, is it better to wait until that channel breaks, or can you play it off the bounce off the support and resistance within that channel? So first off, let's take a look at what is a channel. So a channel is typically when a stock is moving in a tighter range pattern than normal. Think of this like a stream, a channel of a river. So it's tighter, it's smaller, it's a smaller pattern range than what the river normally flows. Now, there are typically three types of channels. You have a sideways channel that can happen, you have an upward channel, and then you also have downward channels. So how does the stock move within this channel? Well, typically you will have a stock move from the downside or from the upside region, depending on where it's coming from. So let's say it's moving from the downside region. Then what you may get is a bounce at some point. Now this first bounce right here, that would be your initial point or swing point. Then you may get another bounce higher, and then you get a second bounce lower. Okay, the second bounce lower, if it's in line with the previous point, this slowly starts to create a channel. Now your next point might go a little higher, and because these points are at different levels, they may not be considered a top part, a resistance part to that channel. So in fact, until that point comes up to that level and then rejects it, then that starts to create your first swing point. So even though that this over here might be a swing point in this region, that doesn't necessarily mean that is the resistance point. So in either case, this stock may now bounce around here. It may come down now to a third channel, and this might be the place where you might be interested in buying that stock for a cheaper price, hoping that it'll come back to the swing high over in this point where the star is. So now you're looking and you buy that stock, you get in it, and the stock moves higher and it comes up to this point, up to that star level, up to this resistance line, and then you get out of your shares, and again the stock will start to pull back. It hits that point, starts to pull back, and now it can whipsaw around. It can hit it again. It doesn't have to come back all the way to that other channel. It can come back down to that support level, which right here, this line is our support and the upper line is our resistance. So these ranges can play around, and sometimes they can go past those channels or a little beyond those channels. Just like you don't meet your friend at exactly 6 o'clock for dinner. Sometimes it's 6:05, sometimes it's 5:58. Those channels and ranges will also move beyond those price points and price levels, as you can see. So they won't hit it perfect. So let's take a look at applying this knowledge to a real stock chart. So here we are taking a look at WIN, and there's a handful of channels here. We are looking at the daily chart here. And if you can't spot the channels, I'm going to point a few out for you. So here's a sideways channel. You can see that's the upper resistance level. Here's the lower support level. We have another channel over here that's also sideways. Now, in between those channels, you also have a downward channel. You can see the stock is moving here in this downward fashion. Here on this side, we have an upward moving channel. Again, support and resistance. We also have another sideways channel here. We have a kind of a little upward channel over on this side. So you can see there's a lot of different channels. If you go ahead and zoom out on this to the weekly, now you get to see things a little bit different. So you can see here we have, again, little channels that really create this chart pattern. So what do stocks do? Well, they move sideways, they digest in a channel, and then they'll break either to the upside or the downside. And you can see there's a downward channel. Then we move sideways. Then again, we move downward in the channel. And then again, we move sideways here. And then again, we break lower, sideways, break lower. And this happens same thing to the upside. So if you take a look here, there's a little sideways pattern or a retracement pattern, and then we break to the upside in a little channel. Then we go again, move a little sideways or a little digestion period, and then again we pop higher. So that's how stocks move. So the question really comes down to, is it better to trade within that channel, or is it better to go ahead and trade once that channel breaks? So let's evaluate one of these and go into one of these channels and then discuss it. So first, if you notice that most of the times when these channels become prevalent or become important is really when the stocks are at the highs or the lows of these support and resistance points. Now, typically these channels happen or only occur when you have a few points. So if I go ahead and start and look at this channel, we notice that initially this stock was coming down in a pattern. Okay, so it was coming down with momentum and force, and then we have a digestion pattern, which is that channel. Okay, and then we have another break to continue that pattern. So if we look and evaluate at just this pattern, we have our first initial pop right here in this cyan level. Okay, so we have our first initial pop right here. So that doesn't really create a swing point. It does create a swing point, but it doesn't create this support line yet. Then we have another point that we hit, the resistance level right here. And now we may be able to create a price or level, but we don't know if this price or level would be like this. We don't know the angle of that level. So until we have a second point, which happens all the way over here, we don't know. So now this stock actually comes down, and now we hit another point, which is basically right here, but it doesn't get to it. So we don't know, again, if that line should be drawn like this to the upward level, or maybe even lower, which is what I've done actually over here, because the third time that we come back, we go beyond that line. And then finally, the fourth time, really, we have these 4 points that are being hit. So your entry point when trading in this channel, you can only do this entry point only after this little line or after this little red point, because that's where you kind of already are building your support line and you potentially have a resistance point. But really, you only see the real resistance up until this level, okay, up until about February. So your point in getting in would be pretty much, let me draw it here in yellow, would pretty much be right here. That would be your bounce level or entry point. And if you got into this level, then you would basically have to get out right here because you know that we're coming into resistance. So you could do that. You could get in it right here and then get out at the upper level. And then you could short the stock because you know it's coming back. And then again, get out right there. So now what happens to the stock? Well, you get the run from here to here, and then you also get the run from here to here. So you get 2 runs basically in this stock. Okay, so you get the upward pattern, you get the downward pattern. However, your run from here to here is really only about 15 points or so. The better run is really if you wait for that break somewhere in this range where the pattern broke. Now you can go and follow this whole pattern. It's a lot longer and it's safer. So can you still trade within this channel? Absolutely. You can trade within that channel. However, the problem is you need to spot where that channel is. And sometimes you don't know until after this second point or even this third point. Until after this point, you really don't see that channel. It's very difficult. You can guess and predict it, but you don't know. So personally, it's a lot easier to really look at those support and resistance lines and then wait for that break. And you can see this happening in a handful of areas. So if we backtrack into this and you back up a little bit, you can see that here we have a channel, okay, a sideways channel that happened, but we wouldn't really know that this was a channel until probably, right around here's a point, probably until this point somewhere here. Okay, so around this level. And then of course you could get into the stock at this level and then get out of the stock over here at this level. And then again, you could short the stock after a break. So you can do that, but the less risky, remember, my goal is always to do what's less risky, is to do it when the stock breaks that support or resistance level. and then you ride that wave. And now you ride it down a little bit sideways, then you move it down. Then you have retracements, okay, which you could play on that channel, and then you have your break. Then again, little sideways retracements, then a break. Sideways retracements, and then a break lower. So you see how that pattern really continues to repeat. And then it happens to the same thing to the upside. Now here you notice the stock was changing direction, and you can tell it was changing direction because of the time that that pattern, sideways pattern, was evolved. This one was 4.7 months. Whereas this little pattern that was upward was around 2.2 months, about 10 weeks. Okay, this pattern up here, little sideways pattern, 3.6 months. Okay, we have another little sideways consolidation pattern right there. This one lasted about 1.6 months. So you can see those pausing patterns, they take a little bit of time to evolve. And this one that was moving sideways took a little bit longer because we were changing the direction. So this one took about 4.7, almost 5 months. And now we've changed the direction after this channel. Of course, we could have played within this channel, but this was our first swing point. Then we had another one up here and a second one. So now we could short the stock here and short the stock there, but we didn't get a long run. We only got it up to here. The second time we got it here, but now that would create our support level. Okay. And your run here is very minimal, okay, because you're playing in the noise. Whereas instead, if you went ahead and got in right here at right around the $80 level, now you could go up to the $100 level. So that's a 20-point spread right there, and it makes things a little bit more in your favor. So that kind of hopefully gives you some insight to trading within the channel versus trading the breakout or the breakdown and riding it all the way down on the trend. Now, if you'd like to see more questions and answers like these, go ahead and visit investinghelpdesk.com. And for detailed investing and trading education, visit my website at tradersfly.com. And feel free to take a look at some of my courses, the podcast, critical charts, or even subscribe to my channel here on YouTube by just clicking one of these buttons right here. Thanks again for joining me, and I'll see you next time.